Hello, and welcome back to the channel. I'm Algabot, and today we're taking a close look at an expert advisor for MetaTrader 5 called Vacuum Gap Continuation. This is a pure price action strategy, which means it uses no traditional indicators at all. Instead, it hunts for something called a fair value gap, a small 3-bar imbalance left behind when a single powerful candle rips price in one direction. Over the next few minutes, you'll learn exactly how the strategy spots that gap, how it parks a resting limit order inside the void, and how it manages the stop loss and take profit. Let's dive in. So what exactly does this expert advisor do? Vacuum gap continuation is built on a single, well-known price action concept, the fair value gap, sometimes just called an imbalance. The idea is simple. When one unusually large candle pushes price hard in one direction, it often moves so fast that it leaves a small, untraded pocket behind it, a kind of vacuum in the price. The strategy's whole job is to find that pocket and trade the way price tends to behave around it. Now, instead of chasing the move while it's running, this strategy does the opposite. It waits patiently. It assumes the market will often pull back to revisit that unfilled gap before continuing in the original direction. So it parks a resting limit order right inside the void, lets price pull back to fill it, and then aims to ride the continuation. Because it reads raw candle highs, lows, opens, and closes, this expert advisor works on a single time frame and can be applied to any symbol you like, whether that's a major forex pair, an index, or a metal. There are no moving averages, no oscillators, and no lagging signals involved. It is 100% geometry of recent candles. In terms of who it suits, this is an educational example of a patient, structured approach. It only ever works one setup at a time. It uses a fixed reward-to-risk multiple, and it automatically cancels orders that don't get filled in time. That makes it a clean teaching tool for understanding how imbalance-based entries, resting limit orders, and order hygiene fit together. As always, everything here is for educational purposes only and is not financial advice. We're studying the mechanics, not making any promises about results. Let's walk through the exact logic step by step. The strategy only does its work once per completed bar, so it isn't reacting to every tick. On each new bar, it looks at the 3 most recently closed candles. We'll call them A, B, and C, where A is the oldest, B is the middle, and C is the newest. The middle candle, B, is the key. The strategy measures the average candle range over the previous 20 bars, and B must be substantially larger than that average. By default, B's range must be at least 1.6 times the recent average. This is the displacement filter. It guarantees we only act on a genuinely strong expansion candle, not on ordinary noise. Next, the strategy checks the geometry for a gap. For a bullish setup, the high of candle A must sit below the low of candle C, leaving an empty zone between them, and candle B must be a bullish, up-closing candle. For a bearish setup, it's the mirror image. The low of A sits above the high of C, and B closes down. The gap also has to be wide enough, at least a quarter of the average range, so we ignore trivial gaps. Once a valid gap is found, the expert advisor places a single resting limit order inside the void. The FillDepth parameter controls how deep into the gap the order sits, with a default of halfway in. For a bullish setup, it places a buy limit. For a bearish setup, a sell limit. The protective stop loss is parked just beyond the far edge of the gap, buffered by a fraction of the gap's size. From there, the risk is simply the distance between the entry and the stop, and the take profit is set at a fixed multiple of that risk, 2 times by default. Finally, there's order hygiene. The strategy only ever manages one setup at a time. If the limit order isn't filled within the expiry bar's window, 6 bars by default, it gets canceled. And if a candle closes right through the far edge of the gap, the setup is considered invalidated and the order is pulled. This keeps the strategy clean and disciplined. Let's read through the MQL5 code on screen as if we were sitting in MetaEditor. At the top, we have the input parameters. Lots simply sets the order volume. Displacement multiple is the heart of the filter. Raise it and you demand an even bigger middle candle, taking fewer but stronger setups, while lowering it loosens the requirement. Min gap fraction sets how wide the gap must be relative to the average range, filtering out tiny imbalances. Fill depth decides how deep into the gap the limit order rests. At 0, it sits at the near edge. At 1, it sits at the far edge. Stop buffer frac adds breathing room to the stop beyond the gap. Reward risk fixes the target as a multiple of the risk. Expiry bars cancels unfilled orders. And range loopback sets how many bars feed the average range. Now the signal logic. First, we compute range, the size of the middle bar, and immediately return if it isn't at least displacement multiple times the average range. That's the displacement gate. Next, the two Boolean checks. The bull condition is true when A's high is below C's low and the middle candle closed up. The bear condition is the exact mirror. Inside the bull block, gap top is C's low and gap bottom is A's high. The entry price is computed by stepping fill depth of the way down into the gap. The stop loss sits below the far edge, buffered by stop buffer frac of the gap size. And the take profit is the entry plus reward risk times the distance from entry to stop. Finally, place limit sends the buy limit order. The bearish branch follows the identical logic, simply flipped upside down. Let's watch this play out on the chart. On the left, notice the large green candle. That's our displacement candle, an outsized bullish bar that rips price upward. Look closely and you'll see it leaves a small, untraded pocket behind it, the green shaded fair value gap. The high of the candle before it never overlapped the low of the candle after it. And that empty space is exactly what the strategy is looking for. Rather than chasing the move, the expert advisor places a buy limit order resting inside that gap and simply waits. A couple of bars later, price drifts back down into the void and fills our order at the marked buy level. From there, the continuation takes over, price pushes back up, and the trade reaches its take profit at the fixed reward to risk target. Now watch the right-hand side, where everything flips. Here a large red displacement candle drives price sharply down, leaving a bearish fair value gap above it, shaded in red. This time the low of the earlier candle sits above the high of the later candle, forming the imbalance. The strategy parks a sell limit order inside that upper void and waits for price to pull back up. Price rallies into the gap, fills the sell order at the marked level, and then rolls over, completing the continuation down to the take profit. Notice how in both cases the strategy never chased. It let price come back to the imbalance, entered passively with a resting limit, and aimed for a fixed multiple of its risk. This is purely an illustration of the mechanics, for educational purposes only. And that brings us to the end of our look at vacuum gap continuation. We covered how this pure price action expert advisor spots a fair value gap left by a strong displacement candle, how it rests a limit order inside that void to trade the continuation, and how it manages its stop loss, take profit, and order expiry with simple, disciplined rules. Remember, everything in this video is for educational purposes only and is not financial advice. We're studying how the code and the logic work, nothing more. If you found this breakdown helpful, please give it a like, hit subscribe for more MetaTrader 5 strategy analyses, and drop a comment letting me know which strategy you'd like me to cover next. You can find more at www.algobot.live. Past performance does not guarantee future results. Trade responsibly.